Abidemi, Omoloja, and I will be presenting the financial ratios between two companies, Boeing and its competitor, Airbus. Boeing is an American multinational corporation that sells, designs, and manufactures airplanes, rockets, satellites, telecommunications, and equipment. Boeing is the world's largest aerospace because of its merger in 1997 with Douglas International Corporation and its 1996 purchase of Defense and Space Unit of Rockwell International Corporation. Boeing has more than 9,000 commercial aircraft worldwide, and it was established in July 15, 1916. Boeing is 103 years old. Wow. And it was established by William Boeing. Some of the jets are MD-80, MD-90, and MD-11, while its airplanes are 737, 747, 767, 777, and 787. Boeing's new development includes Boeing 78-10 Dreamliner, 737 MAX, and 777X. Boeing's revenue as at December 31st, 2019 was $76.5 billion, and it has over 153,000 employees worldwide, and it's headquartered in Chicago, Illinois. The chairman is Larry Kellen, and the CEO and the president is Dave Calhoun. Its competitors are Airbus, Lockheed Martin's, General Dynamics, but today I will be comparing Boeing with Airbus. Now let's talk a little bit more about Airbus. Airbus is an European multinational aerospace corporation, and it was formerly the parent company, and it was founded in December 18, 1970. Airbus is actually 49 years old. Wow. It is headquartered in Netherlands, but its main office is in France. It has over 133,000 employees worldwide. That is huge as well. Well, some of Airbus products are A220, A300, A310, and A313. It has a revenue of $70 billion at the end of December 31st, 2019. And the chairman is Dennis Road, and the CEO is Farouk. Its divisions are Airbus Defense and Space SAS and Airbus Helicopters SAS. Now, we'll go into the liquidity ratios, the time series liquidity ratios for Boeing, and I will put up my Excel file, right? So this is my Excel file for Boeing. So I'll just talk real quick about the liquidity of all the financial ratios. Now, so the financial, let's talk about liquidity ratios. We can see that from 2015 up until 2019, the current ratio as well as the liquidity current ratio and the quick ratio for Boeing has been declining. And then when we mean liquidity ratios, we mean that this is the ability for a company to be able to pay its current liabilities with the current asset they have as at when due. But looking at Boeing's financial liquidity ratios, we can see that it's been declining. So this is really not a good ratio. Talking about the asset management ratios, asset management ratios has been falling basically in the last 5 years, and the account receivable turnover, the inventory turnover, all the assets management ratios has been falling, and this is not a good ratios because they've not been doing well, because it's been declining over the last 5 years. Let's move right on to the debt ratios management. We can also see that the debt ratio has been going up from 2015 up until 2019. The debt to equity was actually negative. The long-term debt and the times interest or N were really low in 2019. So the debt management ratios actually appears that Boeing has more liabilities than assets, which is really not a good thing for companies. Also, the times interest ensures that Boeing is able to fulfill their debt obligations, not until 2019 when everything came to a negative number. Also, when we look at the profitability ratios as well, we can see that their numbers has been fluctuating over the last 5 years. Though for the most part, it's been like the top margin profit has been increasing not until 2019, that everything went down, and most of the numbers under the profitability ratios actually became negative. And so even their return on equity and their return on asset, we can also see that in 2019 it's been really a negative number. So which means that because ROA actually measures how companies use its assets to generate sales. So I would suggest that Boeing must look for a strategy for them to be able to bring back their return on assets number to a positive value. Now I will go right into the cross-section series between Boeing and Airbus. So now I will just pull up my write-up because this is where I have both companies listed. So when I look at the liquidity ratios for both Boeing and Airbus, I can see that although both of them have weak liquidity ratios, but I would say that Airbus is still doing better than Boeing. So this means that Boeing needs to take a quick look at their liquidity ratios to be sure that they're able to pay their current liabilities on time with the current assets they have. Now, moving into the asset management between Boeing and Airbus, we can see that Boeing is actually doing better than Airbus for the most part. The inventory to net working capital for Airbus is actually negative for 2018, because now I'm comparing from 2015 to 2018. I'm going to be comparing over the last 4 years. So for their collection period, we can see that Airbus has been higher than Boeing, except in 2015. Except in 2019, where Boeing was higher. But if you look at the trend for Boeing, it's been increasing since 2015 to 2019, while for Airbus, it's been fluctuating over the last 5 years. For the inventory ratio, we can see that Airbus is actually managing its inventory better than Airbus because they still are low returns, like low ratios, but with Airbus it's still higher. So which means that Airbus is managing their inventory turnover better than Boeing. So now when we look into the debt management ratios, now I have the chart for debt management for the debt ratio. When we look into this, we would see that 2015 Airbus was higher, 2016 Boeing was a little bit higher than Airbus, and 2017 Boeing was higher and Boeing was higher. So except in 2015 that Airbus was slightly higher than Boeing, like we can say that Boeing is less risky to investors because Boeing has a lower Boeing has higher debt ratio, which means that Airbus is less risky because it has the potential of longevity with a company. So when we look into the profitability ratio, we can see the return on equity for both Boeing and Airbus, and then I can say that Boeing is much more profitable than Airbus, and this means that Boeing is probably managing their assets and taking good control of their expenses. So from the chart, we can see how the margin for Boeing is actually so high on their return on equity than for Airbus. So Boeing is doing pretty well in this part. So now when we look at the price to earning ratios as well, which is the market value ratios, we can see here that for Boeing and then for Airbus. So Airbus is much more higher than Boeing in 2016, while in 2018, Airbus was slightly higher, same thing as 2017, but in 2015, Boeing was slightly higher than than Airbus. So which means that they've been fluctuating, but Airbus is still higher. So investors anticipate higher performance and growth in the future. So we can see that from the financial ratios between these two companies, we can see that Airbus is actually doing better than Boeing. Now let's go into the cost of capital analysis, and I will bring the Excel file for that real quick. So this is my cost of capital. So this is my cost of capital for the company. And I was able to get my weight of equity. Weight of equity means what percentage of externally shares outstanding is being supplied by shareholders. And then my weight of debt is what percentage of externally outstanding is being supplied by debtors. So basically we can see that the weight of equity for shareholders is 89.9%, while the weight of debt for lenders is 10.09%. So which means that when lenders bring 10.09%, they get 2.65% on the return required rate of return. While for equity, when shareholders invest 89.91%, they get 7.02% required rate of return, which is pretty much good because our weighted average cost of capital is 6.38%. It's pretty much good because it is greater than the required rate of return for lenders, but it is lower than the cost of internal equity for our shareholders, which is pretty much good. So which means that to invest in Boeing, we will need a risk premium that is 1.19%, and I calculated this in the historical stock prices, which I'm going to be sharing very soon. So basically the weighted average cost of capital is the required rate of return that we have as a company in order to provide our investors with a rate of return that they need. So this simply means that, like I said earlier, 89.91% of funds are coming from shareholders, while 10.09% are coming from investors. And they would have a required rate of return of 2.65%, that is the lenders, and then the shareholders would have a required rate of return of 7.02%. And then one way that we can check if this is actually correct is to make sure that the weight of equity plus the weight of debt actually equals 100%. And this is what I just calculated right here. So which means that this is really right. So as long as this adds up to 100%, then it is. So this is my required rate of return. This is my cost, WACC, my cost of internal, cost of debt, my tax rate, as well as the cost of internal equity. So that is all about that. Now I would be pulling up the historical prices for Boeing. So this is my historical prices for Boeing. I was able to get a dollar return. I was able to calculate the annual return daily, which is 0.11%. I was able to calculate the standard deviation, 6.60%, the correlation between Boeing and the market, that is S&P 500, which is 0.59. The Boeing beta using the slope function is 1.2. Our beta for Boeing is 1.19. Our S&P beta is 0, that is the market, is 0.29. The R square is 0.35. And then the intercept is 0.003%. And this is the graph, the regression right here. So basically, Boeing has a moderate correlation between with the market. We can see that it's 0.5 now, which means that it has a moderate correlation coefficient. It is positive, and which means that as the price of the market goes up, as the market goes up, the stock price for Boeing as well goes up. So this is actually a good one. Beta is used to determine a stock price profile. So Boeing's beta is higher than the market because Boeing's beta is 1.19 and the market is 0.29. So Boeing's beta is actually higher than the market. But this might be riskier, but it provides potential for higher returns because it is higher, so it provides potential for higher returns. Although, like I said earlier, it is higher than the market, which might be a bit riskier, but the compensation is that it could provide a higher, rates for investors. The ask price is 0.35, that's 35%, and their y-intercept, which is 3%. This means that Boeing stocks has earned about 0.03% more per day than an average stock of over a 2-year period. So that would be this for now. I will just talk briefly about the dividend. So I was able to calculate my internal equity with the dividend annual approach. So I was able to get my data from Yahoo Finance, and then I was able to calculate it, added it up, and so I was able to project it as well. I was able to project the growth for 2020, which came back as 0.68%. Also, I was able to calculate the average geometric, came back as negative 10.23%, and then my return on equity, which came back as negative 10.02%. So that will be all about their ratios. But now let me just give like a concluding remark between Boeing and Airbus. So because of the huge crash that happened last year, because Boeing had this huge crash, the plane crash last year, I think within 5 months, and this actually had a negative result in their revenue and their economic at large. This is because the 737 MAX was grounded and by the government, so they will be able to look into it and see what is causing this major crash, killing over 300,000 people. And so that is why we could see in their ratios that they really fell, and they were just running into negative because they couldn't like generate sales and generate income. And so because they've been doing well pretty much until 2019 when all this happened. And so they tried to reopen their facility last week, but the government didn't approve them, so they've been told to wait till August to see, what is going to go on. And because of them, because they had to reopen partially, but they had to like close it again, and it resulted in their stock price falling. And also, because of this pandemic that we are in, it has actually resulted in a lot of damages as well. And so Boeing needs to revamp their software in order for them to get approved again by the government. So there won't be any contract on their 737 MAX for now. And like I said, this is why Boeing's finances has been really, really down in the last year. So they're able to generate, so this is the first time, they would have this kind of loss in 20 years. Putting this current pandemic into consideration as well, all other airlines would not be buying any commercial airplanes for now. And Boeing could be lucky to, have the military buy their airplanes, or again, we don't know when and how soon this is going to be. So I would suggest that Boeing should keep, looking for more strategies on how to better their revenues and better the company at large, as well as just, looking for new software. So the plane crash would, at least be a little bit, be more managed than before. And also for Airbus, because of all this that has been happening, because normally Airbus and Boeing, they're rivals. And then, in 2017 and 2018, Boeing delivered more aircraft. But after the two crashes, like I explained earlier, that happened to Boeing sometime in April of 2019, that had their 737 MAX grounded. Then 2019, in 2019, they had to stop production and deliveries of their popular jets, which is the 737 MAX. So Airbus was able to supply more than 483 planes, wow, than Boeing in 2019. And this is their biggest margin so far in the last 45 years when they actually became rivals. And then Airbus was also able to secure more than 700 net orders. Well, Airbus' main competitor to the 737 MAX is the A320neo. And Airbus is delivering the plane in greater numbers and types now because of what happened to Boeing. Well, at the end of the day, I was able to really learn a lot in this class, and thank you to my professor, Dr. Chatterjee. And this is the end of my presentation. Thank you.